Hello guys, welcome to my YouTube channel. In this video, I'll be explaining market structure. So, what market structure? Market structure is the underlying framework of how price moves, identifies swing highs, swing lows, support and resistance levels. So, to understand market structure, you need to understand the three forms of market movements. And there are three forms of market movements, which are uptrend, downtrend, ranging markets. And each one comprises of four swing points: higher high, higher low, lower high, lower low. So this is an example of an uptrend market and an example of a downtrend market. But to understand uptrend markets, you need to understand the concept of break of structure and the concept of higher high and higher low. So what's break of structure? Break of structure is when price breaks above the previous swing points. That level is called a break of structure. Same goes for the next one. Yeah, same goes for the downtrend and the other. And higher high. The reason why this swing point is called an higher high is because of it was higher than the previous high. This was an high, and here is also an high. But this level is called an higher high in an uptrend market because of it's higher than the previous high, which is this high. And this level is called higher low because of it's higher than the previous low. Same goes for the downtrend market. On the downtrend market, here is called a lower high because of this high is lower than the previous high. And this place is called a lower low because of this low is lower than the previous low. Lower than this previous low. But in the ranging market, there is no clear direction. So there is no need for higher high, higher lows, lower low, lower highs. Yeah, there's a struggle between buyers and sellers in the market. So in this type of market, it's consolidating. You learn to stay off this kind of market. You do not engage in any position, any buy or any sell position here. So when you see price trending up, you tend to look for buys. And when you see price trending down, you tend to look for sales. And I know some of you might be confused. Why not just a straight line as downtrend, and why not just a straight line as uptrend? It doesn't work like that in the market. Because of wherever there are buyers in the market space, there will always be sellers. Even though the buyers are greater than the sellers, there will always be sellers. Same goes for a downtrend. Wherever there are sellers, there are buyers. Even though the sellers are greater than the buyers, there will always be buyers. So all these pullbacks are buyers entering the market, and the strong move are sellers in the market, which means sellers are greater than buyers. Same thing for an uptrend. This pullback are sellers entering into the market, and the strong buy means buyers are more than the sellers in the market. So when you see price trending up, creating multiple break of structures, respecting lows, and creating multiple break of structures to the upside, it means buyers are greater than the sellers in the market. And when you see price breaking structures to the downside continuously and respecting highs, it means sellers are more than the buyers in the market. While in a ranging market, when you see price moving from up to down, consolidating like this, it means the buyers and sellers in the market are not equal or not greater than each other. Something like that. Means price is consolidating. There's a fight between the buyers and the sellers. At some point, the buyers are greater. At some point, the sellers are greater. So both sides are a bit equal. That is when consolidation comes in the market. And most times consolidation comes in the market mostly on lower time frames. If you understand time frames, you should understand what I'm talking about. So let me show you a chart example. But before I go into a chart example, there's something I want to make clear, because most people at times tend to confuse break of structure or use break of structure to identify trends. You don't use just break of structures to identify trends. You use break of structures and your 4 swing points to identify trends. Because of break of structure can occur anywhere in the market. It can occur on a bullish move, it can occur on a bearish move. A bullish break of structure can occur on a bearish move, and a bearish break of structure can occur on a bullish move. So with the help of higher highs and higher lows, you can use that to identify your trend. So let me show you a chart example of what I'm talking about. So this is my chart. I call this place a higher low because of this low is higher than the previous low, and here my higher high because of this high is higher than the previous high, so I call this my higher high. And as you can see, break of structures are already occurring inside this range. Let me mark it out. Break of structures are already occurring inside this range. At times you can see a bearish break of structure in a bullish trend. That is why I said higher highs and higher lows are very, very important when identifying your trend, not just break of structure alone. Some tend to learn break of structures and forget about their higher highs and higher lows, which leads them to a lot of losses in the market. And same goes for a bearish move. This is called a lower low because of this low. This is called a lower high, sorry, because of this low is lower than the previous high, which is this, and this lower low is called a lower low because of this low is lower than the previous low, which is this. This was the last low after the change of character. And where is the change of character? Here is the change of character in the market. I don't know if I have anything like that, so let's just see. Change of character. And if you don't understand the concept change of character is when price shifts trend from bullish to bearish. The term bullish is for uptrend and the term bearish is for downtrend. So when price shifts from a bullish market to a bearish market, that is when a change of character occurs. And a change of character occurs when price takes out a higher low, higher low points. Let me mark that out. This is an higher low. Sorry. This is an higher low. Yeah. This is an higher low. So when price takes out an higher low, that is a change of character. And the same goes for a bullish market too. When price takes out a lower high, it becomes a change of character for a bullish move. Don't mind my structures and other analysis. Just focus on what I'm saying. So that is it. As simple as that. Market structure, without market structure, you will not be able to navigate the market easily or understand where to enter from or where to buy from, where to buy or sell from. It helps you identify your trend, identify who is stronger in the market, whether the buyers or the sellers. So that will be all for today. And I hope to see you guys in the next video. Thank you.